Jason's going to talk to a little bit later, to determine if you're eligible for a loan. Now, how can you use these funds? Working capital loans may be used to pay fixed debt, payroll, accounts payable, and other bills that could not have been paid had the disaster not occurred. These loans are not intended to replace lost sales, profit, or for expansion. Generally speaking, this program wants to cover 6 months worth of fixed expenses for you. So they want to lend you enough to cover rent or mortgage, utilities, debt payments, interest payments, vendor payments. And as Jason will explain later, when he walks you through the application, everything will be listed out there. Collateral requirements for the loan. The economic injury disaster loans over $25,000 require collateral. Under 25, there is no collateral. The SBA will take real estate as collateral when it's available. So for guarantors that might have equity in their house, or a business that may have equity in a business asset, they will take that as collateral. SBA will not decline a loan for lack of collateral. So if you don't have equity in your house, it doesn't matter. The SBA is just looking for any available. But if you don't, it does not mean you can't apply for the loan. What kinds of small businesses can apply? Again, these are examples of businesses that can apply, but there are others. Hotels, recreational facilities, manufacturers, sports vendors, owners of rental property, i.e. landlords, restaurants, retailers, travel agencies, wholesalers, and there's many more. What other criteria is involved? So the applicant business must have a physical location in the disaster area. You cannot just have merely a P.O. box. That is set in stone. Are there any businesses that are ineligible for this loan? Yes. Any agricultural enterprise, religious organizations, charitable organizations, gambling casinos, and real estate developers. There are others, obviously. We're just trying to give you a snapshot. The real estate developers, just pay attention to, because while they're not eligible, if they own buildings and are landlords, as a landlord, they are eligible. SBA's working capital loans are different than other loans. This comes directly from the U.S. Treasury. You do not go to your bank to apply for this loan. There's no cost to apply. There's no obligation to take the loan if it's offered. And if you have an existing disaster loan, it does not preclude you from getting another loan, but you cannot consolidate the two. I'm going to invite Jason Acker up here now to go over the documentation with everybody. It can be overwhelming, but he has done a great job in trying to lay it out for everybody. Thank you, and I'll be back at the end.
Thank you, Pete. Good morning, everyone. Thank you for joining us. Before I get into the specific documentation for the EIDL program, I just want to go over a couple of things to note as it relates to EIDL program versus CARES. Lynn's going to talk more to you about CARES in a little bit. This documentation is specifically for the EIDL program. To apply for CARES is going to be a completely different application process. It's going to go through your bank and not directly through the SBA. The CARES program has some very attractive features, particularly the element of debt forgiveness for payroll amounts that Lynn is going to speak to. This is some of the things that have caught a lot of attention in the media and that has a lot of businesses excited. What we do know now is that you will not be able to accept funding under both the CARES program and the EIDL program. You will have to pick one or the other. What we're not sure of at this point is whether you're allowed to apply under both the EIDL program and the CARES program. We have contacts within the SBA that believe you are allowed to apply for both and simply pick whichever offer you like better. But some of the language in the CARES bill that Lynn's going to go over leads us to believe that that may not be the case and that applying for EIDL may disqualify you from applying for the CARES program later. So after listening to the presentation, you may want to decide that if CARES is the route that you want to go, it may be better to hold off on applying for EIDL until we have more clarity. Once we have that clarity, we're certainly going to communicate that to everyone as quickly as we can. So with that said, we're going to get into the specifics of the EIDL documentation. The basic filing requirements are listed on this page. The first application is the basic SBA loan application, which is Form 5 or 5C. Form 5C is going to be used for sole proprietors. So that's anyone who owns their own business and that business does not file a standalone tax return. The income and expenses get reported on the income and expenses get reported on the owner's individual tax return. Form 5 is for any business that files a standalone tax return, a partnership or a corporation. That's the form that we're going to walk through in a little while. Form 4506T, tax information authorization. You're required to submit copies of the most recent federal income tax return for the business. There's a schedule of liabilities, Form 2202, and a personal financial statement required, Form 413. Right now, I'm going to give you a brief high-level overview of each of these forms and talk through some of the more confusing parts of these forms. At the conclusion of this webinar, you'll receive an email that contains a checklist that goes through each of these forms in great detail, line by line. What we want to do is we want to give business owners the tools that they need to fill these loans applications out correctly and get them out as quickly as they can and get funding as quickly as they can. So while we're going to go through only some high-level points here, keep a lookout for that checklist, and that's going to walk you through everything in much greater detail. So this is Form 5, the basic SBA EIDL Loan Disaster Program application. The key things to note on here. Top section, you leave blank. The SBA fills this in when they receive your application. In terms of what you're applying for. So this form is for both the EIDL program and physical damage program. Physical damage is more tailored towards natural disasters, hurricanes, tornadoes, things like that, where your physical building has been damaged. So you'll see within this form a couple references to physical damage. All those sections we're going to either leave blank or put NA because what we're applying for is economic injury, the EIDL program. The next few sections are basic information about the business, what type of business you are, name, address, etc. Damaged property address, again, we're going to leave that blank. Individuals to contact for, that's if you get for, again, damaged property where there's an insurance adjuster who's assessing damage, so we're going to leave that section blank as well. Item 15, amount of estimated loss. So this is one of the unique features of the EIDL program. For a physical disaster loan, you would put in the amount of property damage that you incurred. But for the EIDL program, we're not requesting a specific amount. The SBA does not allow you to request a specific amount under the EIDL program. They review your financial records and then they come back to you with an offer. So section 15, we're going to leave blank. Section 16, you'll generally be leaving blank unless you have some sort of business interruption insurance that's providing you a payout under this current situation. But in most cases, that's going to be NA. Section 17 is where you're going to fill in information about each of the business owners. Anyone that owns more than 20% of an interest in the business needs to be listed here. There's room for 2 people to be listed, and if there's more owners than that, then you would want to print out an additional page and list all the owners on there. If you've got a tiered structure where the owner of the business is another entity, then you would list that here, and you would ultimately want to list the ultimate individual owners of those businesses in section 17 as well. Section 18, there's various questions that you need to answer about each one of the owners. And if there are any yes answers, you'll need to provide additional information on that. Section 20 is another physical damage section that we're going to leave blank. And then there's signature at the bottom. So that's the basic application. Some of the other required forms. Form 4506T. What this is requesting to the IRS a copy of a transcript of your tax return to be provided to another entity. And again, these forms are going to be in with the checklist that you're going to receive after the presentation. It's already been pre-filled in for the transcript to go to the SBA Office of Disaster Assistance. Line 6 is where you're going to put in the individual form that you're requesting a transcript for. So it would be generally a 1065, an 1120, or an 1120S for the business, and a Form 1040 if it's an individual tax return. You are going to want to fill this out for both the business and then any owners that are over 20%. Line 6C has already been pre-checked, and then Section 9 is where you put in the 3 most recent tax filing years. So if you filed your 2019 tax return, then you would include that and you would take off 2016. Or if your business files on a fiscal year, you would modify these dates accordingly. Signature at the bottom, and then within the checklist, there's instructions on where to send this. Form 2202 is the schedule of liabilities for your business. So you want to fill this out as of a current date, as current as you can reasonably get based on your bookkeeping records, ideally sometime either at the end of February or within the last couple of weeks. So what you're going to do is you're going to fill in each and every business liability that you have. So any lines of credit, any bank notes, mortgages, etc., you would list those individually in the respective terms. Any capital leases you would want to list on here as well. And any other liabilities such as accounts payable. You would put in one line for accounts payable and list your total accounts payable. A line for accrued payroll. Apologize, everyone. I understand we're having some technical difficulties. We're going to go offline for about 30 seconds and try to reestablish. I think I have to go back. All right, everyone, sorry about that. I'm going to go back to the last form just in case technical issues cause people to not see that. So this is the basic transcript request form. Again, what this is going to do is this is you authorizing the IRS to send a transcript of your taxes to the SBA. So the top section you fill in with all your applicable tax information. 5A is pre-filled in. Section 6 is where you put the tax form. And then Section 9 is where you put in the dates of the last 3 years that you're requesting a tax transcript for. Form 2202, as I said, is the schedule of liabilities. So this is where you're going to list out every loan, line of credit, mortgage, etc. that you have, and have additional lines for your other liabilities such as accounts payable, credit cards, accrued expenses, things of that nature. So what you want to do is eventually we're going to talk about submitting a current balance sheet for the business. You want to have these liabilities be as of that balance sheet date, and you want to have the total current balance and all those liabilities tie back to the balance sheet. The SBA is going to look for that to make sure that all ties out. The next form that everyone's going to be required to fill in is Form 413, which is a personal financial statement. Every owner that owns more than 20% of the business is going to be required to fill this out. This is a fairly standard format that anyone that's applied for a loan before likely had to fill this out for their bank. It's simply listing all personal assets and personal liabilities. It's important to make sure that you're only including personal assets and liabilities on here, that you're not including assets and liabilities of the business, because you don't want to double count that. The SBA is going to see that on your balance sheet. They don't want to see items being duplicated. It's also important to note that, generally speaking, rounded figures and best guess estimates are appropriate here. You don't need to go in and get exact figures for every single thing that you have down to the penny. In fact, you're supposed to round it to the nearest dollar, and in most cases, folks will round to the nearest $100 or the nearest $1,000. The idea is you just want to give the SBA a fair and accurate representation, general representation of what your financial condition is. So you list your assets here in various categories, liabilities the same, and then net worth is simply the difference between the two. It's going to allow your total liabilities and net worth to equal your total assets, basically like a balance sheet balancing. There's additional sections where you want to report what your typical income is. Again, rounded figures, approximate figures are acceptable here. Contingent liabilities. And then there's additional schedules where they ask for some additional detail. Sorry, guys, we're going to try to reconnect again. All right. Apologize, everyone. So we'll go back to the top again. So like we talked about, assets and liabilities. Again, just make sure that you're only including personal, not business on here. And also I'll note that whatever date you're preparing this as of, you want to have it be a recent date and you want to list that date up here. The SBA is going to look for this to be at least current as of 90 days. So you wouldn't want to have this be as of any date further back than 90 days. The more current, the better. Again, these supplemental sections are just where they're requesting more detail on some of the assets and liabilities. You just want to make sure that the totals you have in these subsections total back to the totals on the front page. And then signatures at the end. And again, the checklist will go through these in a lot more detail. The final form is this form here. And this form is where you're required to list out your sales by month for the last 3 tax years and the current year to date. So for most folks going into their books and records, their QuickBooks file, whatever they have, should be able to provide this data. One thing that you want to be careful of is if your tax preparer made any adjusting journal entries, or if you have any accrual to cash differences. For instance, if your tax return is cash basis, but your books are accrual basis, there may be differences there. You do want these total sales figures to tie back to the tax returns that the IRS, that the SBA, is going to be receiving. So you may need to work with your tax preparer a little bit to make sure those numbers all tie out. There is a second page to this form, which is a financial forecast. This form truly is optional, and through our discussions with our contacts at the SBA, it's completely not required. In some cases, it may be beneficial, but generally speaking, they're not going to look at this and put too much weight to it because it's a total projection, and obviously no one really has certainty of what's going to happen. What the SBA is mainly going to be looking at is the current and historical financial data that you're submitting, as well as the industry that you're in and the area that you're in, understanding, what the COVID-19's effect has had on you. So those are all of the required basic forms that need to be included with the application. I'm going to go back and talk about a couple of additional filing requirements. So these filing requirements are all things that in the instructions to the application, they all say that they may be required. Through our discussions with the SBA, we should consider these all to be required because if they're not submitted with the additional application, 9 times out of 10, the SBA is going to ask for it. That's going to cause delays. So you are better off including all of these with your initial filing. Complete copy of the most recent federal tax return for all owners over 20%. If you haven't filed a business tax return for 2019, you want to include. All right, we're going to try one more time. Okay, hopefully everyone can see the slides now. Again, just to reiterate, we are going to send out all these slides to everyone in an email after the fact. So, and And we're also going to have the sessions being recorded. The video is going to be posted to the website. So you will be able to go back and match up the presentation with the slides later on if you need to. So again, copies of tax returns for all the owners. If you haven't filed the 2019 tax return yet, an internal balance sheet, profit and loss statement for your 2019 tax year would be advisable to provide, as well as a current year-to-date profit and loss and balance sheet from the business. The important thing is here is the SBA wants to see your fixed obligations. They want to be able to know what you're paying in rent, in debt service, things of that nature, expenses that are not going to go away just because you may have had a dip in sales due to the crisis. So as long as your financial statements present that level of detail, you should be good to go with the SBA. The additional filing requirements, Form 1368, is the form that we just went through with the monthly sales figures. How to apply. You can apply for this online. The website is listed here, but for at least the last week, if not more, the site has been inundated with applications. Literally hundreds of thousands of businesses are trying to apply for these loans. Our understanding is the site is experiencing a lot of issues and it's relatively inaccessible during normal business hours. So what we've been advised by the SBA is that paper filing is actually the way to go here. So you can fill out the forms that are going to be provided in the checklist, overnight them to this address here in Fort Worth, Texas. That's going to ensure that your application gets logged in and processed accurately and timely. You don't have to deal with technical issues on the website. There's also a number and an email address here that you can call for further assistance. There are some local organizations that are here to help as well, such as the Small Business Development Centers, SCORE, and Women's Business Centers. So there are people locally, in addition to the Bonadio group, that want to help you get through this. So you're welcome to seek out those resources as well. And the SBA has a website that will list some of those that are available in your area. You do want to submit your application as soon as possible, but you also want to be careful that the application is complete and accurate. The number one reason for loans being denied or not being processed properly is missing information. So if the forms are incomplete, it's going to cause delays that you certainly don't want this time. You are able to, once your loan has been processed, you're able to request additional funding if you feel you need it, if you feel the SBA's offer is insufficient. You're also able to request a longer amortization period, up to 30 years, if you need it. Additionally, we understand that every loan automatically is going to be given a 1-year deferral of principal payments. If your loan request is denied, you have up to 6 months to submit additional information for the loan to be reconsidered. Next steps. As we said, we're going to be emailing everyone this presentation, as well as a thorough checklist and the forms that need to be filed. You can use the checklist to complete your application and file it with the SBA. If you do have additional questions, or if you wish to engage us for assistance in preparing these forms, the email address loanassistance@bonadio.com is where you'd want to reach out to request that. And as Pete said, we'll get to everyone's questions as soon as we can. With that, I'm going to turn it over to Lynn Keck, who's going to talk more about the CARES program.
Thanks. Good morning, everyone. We're going to talk to you about the Senate CARES program now. I'm sure a lot of you have been tracking this closely. It was approved in the Senate. I get my days confused here, Wednesday, and a 96-0 vote. Currently, as we are speaking on this webinar at 9 a.m. on Friday, it was expected to go to the House vote for a roll call, a verbal roll call, so they could get everyone vote in, even if they're not physically in the location. We are anticipating that it will be passed today without significant changes. And then obviously will be sent up to the president quickly for signature. He has expressed obviously his support for the bill. So now we're sitting here in this world of EIDL SBA loans, and then I'm going to refer to these as the Senate bill loans. And so throughout this process, we're going to be comparing the two loans. And as already said by Pete and Jason, we cannot have both loans, but there's benefits potentially to one or the other, and it's really going to be up to your decision-making process as to what you feel is best for your company. The big significant difference between the two loan structures is that the Senate loan is going to be allowing you to get debt forgiveness. And we're going to walk through all that based on the bill that was approved by the Senate now. So the first thing I want to point out is essentially what the Senate bill did is said that the SBA will back 100% or guarantee of the loan for small businesses that are approved through this program. And one of the significant differences is that now I do not need to go to the SBA for my loan to get approved. They've provided that authority to banks to essentially give loan approval. So now instead of having, as previously stated by Jason, all those forms for SBA, that is if you're going for the EIDL loan. If you're going for the Senate loan, you're actually going to go to your physical bank who has been granted the authority from the Small Business Administration to provide you with a loan. There also are essentially only two evaluating factors that those banks can use for purposes of granting you the loan. The first is, were you in operation as of February 15th, 2020? And did you have employees for whom you were paying salaries and payroll taxes or paying independent contractors? So essentially, those are, because of the state we are in right now from an economy perspective, they feel like those are the only two things that the banks should really be evaluating. Plus, we'll talk about the employee limit in just a second for what small businesses are. So essentially, beginning on February 15th and ending on June 30th, they've added the ability to go out and get a loan. The loan is for businesses, not-for-profit, veterans organizations, and tribunal businesses. And different from the original Senate bill that came out, they have a greater of test. So they say that any of those entities can employ the greater of two amounts. The first being 500 employees. So if you're sitting there today and say, I easily do not meet 500 employees, you're in this bill. And the second piece of it, though, is there are certain size standards issued by the SBA that would allow you to go above 500 employees. So, for example, after our webinar yesterday, I was talking to one of our partners who's working with a food manufacturer, and they have employee limits up to 1,000, 1,250, depending on what we refer to in our world, the NAICS code, or a code that we provide them to classify their business type. So essentially, what we want to pull out of this slide is, just because you're above 500 employees, don't put your head down yet. Take that next step to see if, based on your industry type, you might be able to exceed the 500 employee limit. So when we talk about employees, I know a lot of us have been spending a lot of time in the legislation, including the paid sick leave and the extended medical leave. Their definition of employees is different than this definition that we're talking about here in this bill regarding the loan. They say when accounting your 500 employees, you're not looking at full-time equivalents, but you're looking at full-time and part-time employees. So when you add your full-time and part-time employees together, are you getting to that 500 number? The next thing I would point out is, for this bill, they have really called out the accommodations, so the hotel types of businesses and food service businesses, knowing that essentially we're not going to make you do an aggregation rule, but instead we're going to allow you to measure the employee count at each physical location. So for example, if I'm a New York hotel chain and I have 5 hotels across New York State, if combined I'm over the 500 limit, they're providing you exception and saying, look at each location separately to see if you abide by the 500 limit. In addition, they've waived the similar affiliation rules for franchises that are approved by the franchise directory, the SBA's franchise directory, and they also have included small businesses that receive certain financing for what they refer to as the Small Business Investment Company program. A big win, in my opinion, that was not in the original Senate bill, but it was in the final bill that the Senate passed and sent to the House, that, again, is being decided today, is that they did open it up to sole proprietorships. So individuals who operate under a sole proprietorship or an independent contractor. And I know we're all in a state of flux right now, and we're trying to help everyone. But this was a question we received so many times over the last 2 weeks, is what about those independent contractors or their sole proprietors who are getting laid off? It doesn't seem like they're included in any of this information. And so, excuse me, the one thing I would say is we did see them included in the sick leave and the family medical leave extended act in a different way. And then now we are also seeing them in the Paycheck Protection Program Act. So there is help out there for those types of people. So now you're sitting there and saying, okay, Lynn, you went through and you talked about how can I be eligible for a loan? The banks really don't. I'm going to go to a bank. They don't have that strict of criteria. I have to watch my employee count. What's the amount of loan I can go after? And this is another significant deviation between the EIDL loans under the SBA program and the Senate government loan. The EIDL programs are capped at $2 million, and the Senate program is capped at $10 million. So essentially what they're telling you is they're going to make you kind of do a formula with the bank. And the bank's going to look at the lesser of two amounts. The first amount is you're going to look at your payroll that you've incurred for the last year, and you're going to look at the average monthly payments. And I'm going to look at the average monthly payment and then multiply it by 2.5. So essentially, if you're wondering, well, what's going on, they're saying we're going to cover 2.5 months of your payroll through this loan. That's the intention. And so they're going to, that's your first limit. And then the second limit, which is also a significant difference between the EIDL loans, is they're going to allow you to refinance certain loans into the EIDL loan. So some of you maybe in February or March anticipated cash flow issues related to this virus. And it doesn't necessarily, to qualify that, it doesn't have to be related to this virus. But if you went out and you got a loan after January 31st, 2020, you can also include that in your maximum loan amount because you're going to refinance that loan essentially within this program. So for example, if I look at my last year's payroll and I find out that I have $1 million of payroll on an average monthly payment, essentially that would allow me up to $2.5 million. And then I would be stuck with 2.5 million, not the 10. But if I'm over 10 million, I would only get 10. In addition, when I look at my loan statements and I see that I entered into a loan after January 31st in that same example, I can add the 2.5 million to any loan that was taken into account in February, and that would up my loan allotment. Pretty significant in my opinion. In addition, I would point out here, we didn't want to get into that much detail, but if you're a seasonal employer, there's specific rules for you, as well as if you weren't in existence, right, between January 15th of 19 and June 30th of 2019, essentially, right, that would skew your average total monthly payments when looking back on a 12-month period. There are special rules for you as well. So I'm pretty impressed that they thought those things out in the short timeline they moved this bill through. So as you remember, we talked about payroll costs, right? We're looking at our average monthly payroll costs over the last 12 months. So obviously our next logical question would be, well, what payroll costs are we allowed to include when estimating our payroll? So salary, wage, commission, cash tips or equivalents, which is big for our restaurant industry, payment of vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payments required for the provision of group healthcare benefits, including insurance premiums. That's wonderful. Payment of any retirement benefits are included in those payroll costs. Again, the payroll costs are going to dictate the amount of loan that you can get. And then payment of state or local tax assessed, so your withholding tax for state purposes. But one of the biggest things that I found is the last bullet point that they put in. And essentially, they're very concerned, the government is, as we all are, about businesses keeping operational. And while this bill is going out to employers and employees, they're also concerned about our sole proprietors or our independent contractors. So I just want to make sure this is clear. The loans can be obtained by sole proprietors or independent contractors, okay? But also, employers have the capability in their payroll costs, if they consistently use a sole proprietor and independent contractor, to use that in their payroll costs for the loans they're going after. In other words, we're allowing the employers not just to pay their employees, but to pay the sole proprietor or independent contractor that they might also use within their companies. This is very important for our supply chain, right? Because not only are we trying to protect our jobs, but we're trying to protect the people that work with us in our supply chain in our jobs. So essentially what they've included is that if I'm an employer and I pay a sole proprietor, an independent contractor a wage, I'm allowed to use or commission or net earnings from self-employment, any type of compensation. I'm allowed to utilize that in my calculation of my average monthly payroll. So now when I get my loan, I not only will be paying my employees, but I could also be paying the sole proprietors or independent contractors. That's huge. That's a really big movement, and they purposely did that to help that type of group subset. So you were sitting there and saying, well, wow, that list seems pretty long. What payroll costs don't we include? The one thing that we don't include is compensation of an individual in excess of an annual salary of $100,000 as prorated during this time period. So essentially, to break it down, if you're paying your employees greater than $100,000, you still can pay them what you want, but the loan amount that is going to be given from Congress, and we'll see in a little bit, the debt forgiveness is only going to be up related to the prorated amount if you only paid them $100,000, meaning they're going to front you a loan for $100,000, and they potentially will debt forgive you for a compensation for an employee who makes up to $100,000. And I think that, essentially that's their cutoff. They're saying, we think we'll help you up to a salary that would be annualized at $100,000, but not anymore. In addition, payroll costs don't include our Social Security and our Medicare. So when we're calculating our payroll costs to determine our loan amount, we wouldn't include that. Also, if you're compensating an employee whose principal place of residence is outside the United States, that does not get included in your payroll costs. And then, as I've previously mentioned, there is a bill that was passed under the Families First Coronavirus Response Act that extended family medical leave for people who had to stay at home and watch their children, and extended sick leave, mandatory sick leave of 2 weeks or a certain time period for part-time employers or part-time employees for 5 different reasons. And the point being here, that also allowed employers who employed less than 500 a payroll tax credit. So essentially, the last bullet point is telling you if you're receiving the payroll tax credit related to the Families First Coronavirus Response Act, you can't include that payroll when trying to get a loan from us again. You can't double dip, essentially, is what they're saying. So now we've gone through, who do I go to? I go to the bank. How do I qualify? I have to have been in operation and paying employees. I have to look at my employee headcount, and then I have to try to figure out what was in the last 12 months my monthly average payroll costs times 2.5. And now I get this loan, right? And so the question is now, what can I use the loan for? Here's the list, very relevant items that we would need to use the loan for: payroll costs, costs related to continuing group health care benefits, paid sick leave, family leave, and insurance premiums, employee salaries, payment of interest on any mortgage obligation, rent, utilities, and interest on any other debt obligations that were incurred before February 15th. So the point being here, I will point out, we're going to get into debt forgiveness. And obviously, you want to use your loan proceeds towards as much that you could be forgiven the debt for. So while this list is important and we can't go outside this list of how we're using our funds, I would say we're going to aim to use our funds in the specific ways the debt forgiveness lays out, so we can get forgiven for these funds eventually. And so we'll talk about that in a second. In order to receive this loan, you do have to make some good faith certifications. You have to say that the uncertainty of current conditions make it necessary for you to request this loan to continue operations. You have to acknowledge that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, or utility payments. The third piece, where we're trying to get clarification from the SBA, it does say for the EIDL loans, it does say that the eligible recipient does not have an application pending for a loan. for the same purpose and duplicative of amounts applied for or received. So that to us is where we're saying we're wondering how that's going to work. Essentially, what that might indicate, and we're not positive, and we're going to look for clarification on this, that what that might indicate is that you have to choose your application process to go through the EIDL process or through the Senate process, but not both. And we're looking into that to clarify that. What we definitely have confirmed is that you can't have both loans. I can't have an EIDL loan and also a Senate loan. And that's what the last bullet point says. Other good things about this loan through the Senate, it's non-recourse unless you use it for purposes other than what they authorize you to use it. So obviously, if you go on a vacation, which none of us are doing right now because all the airports are closed, I shouldn't say that, but just we're limited, then you wouldn't be able to be non-recourse. In addition, they aren't requiring any guarantee between February 15th and June 30th. There's no personal guarantee required, and no collateral is required. And then they also aren't charging you a fee between February 15th and June 30th. The other big piece of the Senate package is the deferral of payment. And so essentially they're saying we're not only going to defer the fee or not charge a fee, we're going to defer the payment of your principal, interest, and fees between February 15th and June 30th for at least 6 months, if not for a year. And when you say, well, who gets deferral, you mentioned this thing called a impacted borrower. It's a real broad definition. An impacted borrower can get deferral, again, for at least 6 months, provided they had an application in for a covered loan and they were operating on February 15th, 2020. So real broad terms. So most likely, all people who received a loan will receive this deferral of payment. So now that's really, there's two separate acts or laws, and what we just covered was how do you get the loan and what's the amount of the loan. The separate section is loan forgiveness, which is really what people and not only the government but the businesses are excited for. So essentially, the maximum amount of loan that we just talked about is 2.5 times your monthly average payroll. And now the question is, which is even more mind-blowing, is they're going to forgive that loan potentially. And so if you take a 10,000-foot view, what is the government trying to do? In my opinion, and others, as you listen to the news and read the news articles, they're trying to front your payroll for 2.5 months, right? Until we get through this crisis. And so the loan forgiveness is the second piece of this, which is very important. So essentially, what they're going to tell you is an individual or entity that is eligible to receive the covered loan. Again, the loan is 2.5 months of your monthly payroll, is eligible for forgiveness of a certain amount of that debt. And the debt amount that you're eligible to be forgiven are costs that you incurred during an 8-week period after you started your cover loan. So for example, I just to be clear, so it really looks like they're trying to cover 2 months of your loan or 2 months of your payroll. So because again, 8 weeks from the time in which you received the loan. So what can qualify if I use this loan and I look at the next 8 weeks, what items am I looking at to make sure that I can get that portion of the loan forgiven? Payroll costs. So payroll costs as previously defined. So that included payroll to independent contractors, self-employees. It included payroll to yourself. It included payroll to your employees and payroll to your retirement benefits. So go back and reference that definition. But anything you pay once you get the loan 8 weeks out, that can be forgiven. Any payment of interest on a covered mortgage obligation. So a covered mortgage obligation is simply a mortgage on real or personal property that was incurred before February 15th. So to the extent you're paying interest on those mortgages, that also with the loan you receive that in the first 8 weeks, that can be forgiven. Any payment on rent obligations or where you had a lease in play before February 15th, and any utility payment related to the distribution of electricity, gas, water, transportation, or telephone or internet access for which the service began before February 15th. So, essentially what we need to do is we need to be tracking those expenses once we get our loan to show, yes, indeed, we used the loan for the first 8 weeks to pay these items, and that means that the Senate would forgive it. That's huge. You must provide information to the lender to get your loan forgiveness. So what do you need to provide? That's why this documentation is going to be really important once you get the loan and tracking what you're utilizing the loan for in the 8 weeks. You have to provide documentation with the number of full-time equivalent employees on payroll. Things that would provide that would be payroll tax filings reported to the IRS and state income, payroll, and unemployment insurance filings. In addition, you need to show canceled checks or payment receipts for verifying payments on your mortgage obligations, your covered lease obligations, and your utility payments. So all of that makes sense. Those are the items you can get loan forgiveness. In addition, someone at the employer location must certify that indeed the documentation is presented as true and correct, and the amount of forgiveness that is being requested for these items is true and correct. So that's just a certification the employer would do. And then I just add in the last bullet point, they did put in the bill that any other documentation the administrator might determine necessary. I wouldn't anticipate there would be much more than that, but the point being, I can't stress enough, for the debt forgiveness part, you have to document, you have to keep those items. And if you don't keep those items, you don't have that documentation, they do not have to forgive. It actually says they can't forgive the loan. So please make sure you're doing so. You might say, well, when am I going to know? So if I submit all this documentation to the bank for them to forgive my loan, how long is it going to take the bank to get back to me? They've put in the bill that it should only take 60 days, which is pretty miraculous considering the amount of money we're going to be pushing through. Again, this is 60 days for you to get told that you've been forgiven the loan, not 60 days for you to actually get the loan. I just want to make that clear. And then the taxability of it. So oftentimes if you're forgiven debt, that goes into your income tax return as income, and they've been clear in the bill that any debt forgiveness provided through this bill will not be taxed. The last thing I'd like to point out to the group is there is potential for the amount of loan forgiveness that you would like to have to be reduced, and I'm gonna pull up two specific examples. The first example is they're going to look at your full-time equivalent employees during the testing period, and they're going to compare that to your full-time equivalent employees per month between 2 dates. So that's between February 15th, 19 and June 30th, 19, or January 1st, 2020 and February 29th, 2020. So those 2 dates are the choice of the employer, but they're going to compare your monthly full-time equivalents on those 2 dates to your monthly full-time equivalents during the covered period. And if it's not 100%, right, in other words, meaning you had a downtick, then that percentage of downtick would reduce the amount of debt forgiveness you're being allowed. In addition, what they've said is if we see that for employees on an annual basis that don't make more than $100,000, if we see their salary went down more than 25% in your company, then that also would lead you to get a downtick in the amount of loan you're being forgiven. And some of you might say, well, doesn't that seem harsh? If you get to step out a little bit, and it takes us a while, right, to process this and digest this, it's not so harsh because your loan amount that you're receiving is based on the payroll that you had in the last 12 months, right? So if during this new covered period your employees' number have dropped, well then the payroll coverage that they're giving you isn't really for purposes of the payroll because you don't have that many people on your payroll at this time. That's really what they're trying to get at. And so those two provisions are trying to say, hey, we're giving you enough money to pay your payroll for 2.5 months through a loan. And that was based on the prior 12 months when you were fully employed, right? You were at high status. And so we'll give you that money, but we're not going to forgive it if that's still not the amount of employees you have in your books. And the last thing I would point out regarding the loan forgiveness is that there's special rules for tipped workers. And also if you rehire. We've gotten this question a fair amount from people, from our clients, is we laid off, we'd be happy to rehire them with this bill. What does that mean? And there are certain exceptions when trying to figure out how much loan forgiveness you give for rehires that you might have brought back into the workforce. So in abroad, I know that was a lot of information. I know we've thrown a lot of information at you. I think the purpose is for you all to realize the true intent of the Senate and the House, the government, is to keep people on the payroll. And the reason they're trying to keep people on the payroll is that they're hoping when we come out of this crisis, that means that we can economically drive quicker and better than having to then go hire people when this is done. The last thing I always say is, from a personal note, I am not a medical person, right? I vastly appreciate all the work that's being done throughout the country by our medical providers. We at the Bonadio Group, we're business people, right? And so when all of us are trying to put our best hand in to help us through this effort and this crisis, which we will get through, right? Everyone knows we will get through. We're truly trying to help you and all the businesses get through this with the least amount of pain possible. And so we will continue to provide you with alerts and continue providing you with webinars to help you through this process. And we really are working extremely diligently hard to make sure we're getting you the proper information and not getting caught up with potential bills being passed, but the final bills. And we're really doing our best to give you the proper information to make great decisions. So with that, I will say stay safe. I like someone signed off on an email that said stay safe and stay sanitized. So I like that. So I'm going to tell you the same thing. And now I'm going to pass it over to Pete for our closing.
All right, Lynn, thank you so much. How about that update on the CARES Act, guys? Is that unbelievable or what? We're hoping that it gets approved today, and as soon as we have all the finer details, we're gonna put together something so that we know exactly where to go from here. Jason, thank you as well for providing the update on the documentation for the EIDL loan. Also very important. I'd be remiss if I did not thank the other dozen or so people that have helped put this together behind the scenes. We kind of threw this together over the past few days, and despite some technical difficulties, we think the content is outstanding. So we've provided you all with the information we have at hand today. This can and most likely will change over the next few days. As we learn more, we'll communicate that to you through more webinars and additional communication. And again, on behalf of our CEO, Bruce Carey, the Bonadio Group, and my colleagues, we want to thank you for spending time with us. I just want to leave you guys with one little note. Help is on the way. It really is. The government's doing what they can. Economic stimulus is on the way, guys. Just hold in there. It's on the way for every small business affected by COVID-19. So thank you guys very much.